Karina Essa here, and welcome to this video where I'll explain what decentralized finance is, how it started, and how NFTs and decentralized finance will transform how we perform financial transactions. Decentralized finance, also known as DeFi, is financial transactions using cryptocurrency, automation, and blockchain technology. Decentralized finance started back in 2008 from Bitcoin's white paper. The aim of decentralized finance is to replace centralized traditional financial services from everyday banking, loans, and mortgages to asset trading controlled by banks, governing bodies, gatekeepers, and corporations with a financial service that allows everyone access to financial services regardless of who they are and where they are. With decentralized finance, people can have more control over their money and assets. In other words, it's peer-to-peer money. No single party is in charge. All you need is a cryptocurrency wallet and you can trade, borrow, and lend digital assets. With centralized finance as it is today, people have to deal with a large number of middlemen to access financial services such as loans, mortgages, and stocks. With centralized finance, you can't bypass middlemen who earn a percentage of each transaction. So it can play out like this. You put your money in a savings account and earn 1% interest a year on it. The bank takes your money and lends it to its customers at a 3% interest rate. They pay you from the 3%, your 1%, and keep the 2% as their profit. And when you make a financial transaction, it's recorded in a private ledger, your banking transaction history. With stock trading, an order is processed through many intermediaries, a broker and an exchange, and the shares are held in a custodian bank. Decentralized finance led to the creation of decentralized exchanges, and they don't have intermediaries such as Uniswap. With decentralized exchanges, you can trade cryptocurrencies and digital assets, move from one digital wallet to another with less intermediaries taking a commission from the transaction. Before decentralized finance, the only way to send or receive money was through banks and PayPal, and when you did, it left a trace that could be surveilled. Cryptocurrency and the blockchain, on the other hand, allows these transactions to occur without third parties, from one person to another. Now we're witnessing the merge between the two blockchain concepts, NFTs and decentralized finance, that are transforming the way we run and manage financial transactions. In fact, decentralized finance and NFTs are the two most important elements of the cryptocurrency market and the two most prominent applications in blockchain technology. DeFi provides decentralized financial services, while NFTs allow the tokenization of assets. When buying an NFT, you are buying the digital form of a rare asset. In other words, NFTs are unique digital assets that are cryptographically safe. And since NFTs are scarce, they can increase in value based on the law of supply and demand. Unlike cryptocurrencies such as Bitcoin, each NFT is unique. They provide access to something specific to the holder of that NFT. You can compare an NFT to a flight ticket. If someone steals your flight ticket, they can't board the flight because they have to prove it's their ticket. Someone, however, can steal your Bitcoin and use it to make purchases. Combining NFTs and decentralized finance has become possible for many reasons. First, because NFTs provide proof of ownership. Plus, NFTs can act as collateral when borrowing money through decentralized finance. The same way people have used their real estate, boats, cars, stocks, and art as collateral for borrowing money, you can now use NFTs to borrow cryptocurrencies or fiat instead of selling your asset and potentially losing from its future appreciation in value. Borrowing against fine art collections is nothing new. It has been happening for years. In fact, Bank of America has lent billions of dollars to some of its customers against their valuable art collections. Borrowers can then use the funds to purchase more NFTs or even to purchase more cryptocurrencies and sell them for fiat. NFT lenders can use the NFT's value and any other information about the NFTs to make decisions about lending and borrowing agreements. NFT lending and borrowing can only occur on DeFi platforms such as Arcade. Arcade has already loaned millions of dollars against NFTs. DeFi lending and borrowing are powered by smart contracts, a program that runs on the Ethereum blockchain and takes care in a transparent way of the transferability of assets and verifies the ownership of the assets without any middleman. In other words, borrowers don't have to go through banks and financial institutions and go through the painful process of being evaluated and checked and the long process it usually takes for their identity to be verified and their credit score to be scrutinized. They don't even have to gather and provide piles and piles of paperwork either. Users can access smart contracts easily through certain interfaces. Once the NFTs are used as collateral, they are sent to a secure smart contract. Lenders then decide on the value of the collateral, usually by looking at the performance of the NFT over time, such as if it has increased in value, the amount of times it has been bought, and at what prices, and the floor price of the NFT collection it belongs to. Once the lender and borrower agree on the terms, the NFT used as collateral is then sent to an escrow account, and a smart contract allows the loan to be issued. If the borrower can't repay the loan and the interest by the end of the loan period, the borrower loses his NFT and it is transferred to the lender. There are a few NFT lending and borrowing platforms at the moment, with more about to surface. The most popular one currently is NFTFI, which has been described as a digital pawn shop. When using NFTFI, when borrowers use their NFTs as collateral and the lender has accepted their offer to lend them money against their digital assets, the borrower receives wrapped ETH from the lender's wallet into their wallet. The NFT gets transferred into a double audited escrow smart contract for the loan duration. If the borrower repays the loan before it expires, they get their NFT back. If they default on their loan, the lender receives your NFT. In a nutshell, NFTs can assign value to almost anything, while decentralized finance allows the value of assets to be unlocked. No doubt, in the future, the combination of NFTs with decentralized finance will lead to the creation of many more financial products and services. Thanks so much for watching this video. To support our channel, please like the video and don't forget to subscribe to our channel.